Today we are having a session on GST, particularly on real estate sector. Being practicing chartered accountants or in the regular day-to-day life, we face many issues in GST, and particularly I feel difficulty that so many people are facing trouble in dealing with the real estate clients. So we have chosen the topic of real estate, and when we got the GST and these critical issues, we got into the mind only one person, particularly in the Hyderabad region. You know the person who he is none other than CA Satish Saraf. I request managing committee to hand over the bouquet. Thank you, sir, for accepting our request. When I called him, he said, yeah, I'm very busy, but still I can take out some time for knowledge sharing. And he told one more thing also. If you ask me to give a presentation with PPT, I need minimum 3 hours time. Without that, I can't give justification for that topic, because we know we are dealing with this GST since 2017. Still, we are facing many issues. So it is that difficult to give a presentation on it. So we are not going to take it in the routine manner. It is like interactive session. He gives brief discussion on the real estate and related issues, and you can keep on asking any questions one by one. Like I request all of you to not to have cross discussion or arguments. So here we are giving him the position to deal with the entire session. So he will take the final call, like how to organize and all. I am handing over the mic to CA Satish. You can take the question.
Thank you, Lakshmi. Very warm good morning to each one of you. At the outset, I thank Hcas for giving this opportunity, and they thought I am capable to talk on the subject of GST on real estate. I thank, and at the outset, I thank the present President Prabina Kumar and the Vice President Lakshmi Garu and the office bearers who are going to take up the charge in near future, and I wish them a good luck and all the very best for their tenure as the managing committee members of the Hcas. And when Hcas was announced, I thought it will be vibrating like BCAS. And the knowledge share I'm expecting from Hcas is more than what we get it from the Hyderabad branch. And we look forward to have more sessions on maybe small capsules like this, but a detailed and deep diving into the subject that is required. So routine programs we are having at various places, but a small capsule in which you will be dealing the entire subject into that, and you will get into the finest points in the legislation and the finest points where the lawmakers look at it, the things, and the executive is looking at the things, and the judiciary what way they are looking at, and how as a practitioners we have to advise our clients and also take the things forward to give a good conclusion. So this is what I was expecting from the Hcas, but of late, never the late, but we have started the things, and we hope that we'll take it forward and we'll reach the expectation of the members of the Hcas. With this note, next 1.5 hours is given to me. Half an hour to 45 minutes, I'll be taking you through the provisions relating to the real estate transactions in GST. May not be detailed discussion, the important aspects of the topic, and then we will have a one-to-one discussion that is going to be a threadbare discussion. You have a doubt in your mind, and what is the genesis for the doubt, and how the law it says, and what the notification says, and what are the provisions relating to that, and the final conclusion for that situation. Otherwise, there is no meaning in conducting these sessions. I have heard various speakers across India, but they never tend to give a solution. What they feel, we want the conclusion from the speaker may not be true, but what is his view, they never share that. Maybe they think that if I share the views, I may lose the crux of the subject, or he may lose the weightage in the society, or the others may not come to them. Maybe that attitude is there with the various good speakers across India, but so far I am concerned, I am very down to earth, and I should not say on my own, but I will try to give solution what is possible within the framework of the law. I will not travel beyond the law, and wherever constitutional provisions are required to be brought in to discuss this topic, we will bring it, and to what extent the legislatures are intending and what is the judiciary is on that point, we will club everything and we will discuss. And for the next half an hour to 45 minutes, I am not going to bore with these sections, with the notifications, numbers. Maybe here or there I may be uttering the word, say 11 bar 2017, 12 bar, but I will tell you what is that 11 bar 2017. Then we will have a discussion on that. So, in GST, to levy a particular transaction, because GST is a transaction-based taxation, it is not otherwise. It is only purely on the transaction. A transaction need to be analyzed, then whether levy will come or not. To levy a particular transaction relating to the real estate, we have two kinds of transactions in Hyderabad. Let us not talk about across India or across the globe. In Hyderabad, there are two kinds of transaction. One is joint development, and another is sale of land. These are the two major areas we find. In Hyderabad, we don't have any revenue sharing models. In Hyderabad, we don't have, as of today, redevelopment of the projects. So those are the aspects, maybe after 20 years or 30 years, maybe become relevant in Hyderabad. But as of today, most of the builders are into the joint development agreement or big ventures and where land is involved. These are the two transactions. Redevelopment may be prominent in Mumbai, and long lease transactions are very much available, very much in Mumbai, but not across the India. So in Hyderabad we have JDS, and now of late certain landowners, they are developing the property on their own with the help of a contractor, then they are selling the apartment. So this could be a situation, but as of today, the market is not in their favor. So only one or two projects are like that. But most of the projects are JDA and development of the plots and sale. So today I am going to discuss only relating to the joint development agreement, because in case of land transactions, nothing is taxable, because goods, land is neither goods nor services. So GST is not leviable on that. So it is out of the purview of the GST. Only stamp duty will prevail on that, out of GST. But there are certain issues where the GST is also applicable on development of land and sale. If any question comes, we will discuss on that. But mostly I will be focusing on the joint development agreement. In joint development agreement, there is one builder who comes to the landowner. Landowner is having the land. That land will be converted into apartment, maybe 1 tower, 2 tower, 3 tower, 10 towers, or maybe a combination of villas and the big skyscrapers like that, and the landowner and the developer will share the resultant superstructure. Maybe the landowner will get 50% of the constructed area and the developer will get the 50% of the constructed area. In that, what are the areas where the GST is leviable? So what are the implications under the GST law on that? So wherever the landlord has to comply with the law, where the builder has to comply with the law, and what is the rate of tax, when the tax has to be paid, what is the place of supply for that, and what is the value on which the tax has to be levied. These are the questions. If these questions are answered from the perspective of the joint development agreement, there is nothing in GST law which will make us, we don't know anything in GST. So in GST, for every transaction, let it be real estate or a sale transaction or a lease transaction or maybe a service transaction, it must fall into the scope of the supply under section 7. So it need to be a supply. It says that supply in the form of sale, transfer, barter, blah blah blah, it goes, and it says that good involvement of goods or services is mandatory, and the transaction should have the consideration, and this transaction involving goods and services must be in the course or furtherance of the business. If all these 5 parameters are met, then it is a supply. It's clear? So it should be first a transaction of business nature, and it should have the consideration whether it should be goods or it should be service. Then it will qualify as a supply. So when a transaction is not supply at all, there is no fun in going further and discussing on that. So if you look at the 12/2017 notification, which talks about the exempted supplies. So interest on a bank deposit, interest on earned on bank deposit, maybe by way of a SB account deposit or maybe a fixed deposit, it is not a supply at all. But the government went forward and declared that it is an exempted transaction. First of all, it is not a supply because there is no goods, there is no service, and it is not in the course of business. So I am not, the person who is investing money into the bank, that is not his business. So there is no scope of levy satisfied. Then where is the question of exempting it? Likewise, same notification 12/2017, which talks about the exempted transactions. Transfer of a business as a whole or as an independent part of as a going concern is exempted. That transfer of a business never satisfies the scope of supply. A business as an independent entity or independent going concern, it is never a goods, never a service. When it is not a goods, when it is not a service, then where is the satisfaction giving to the scope of supply? When it is not a supply, levy fails. Then there is no requirement for the government to give an exemption notification with respect to that. So even government also travelled beyond the scope of the law. So there are various situations in GST law relating to joint development agreement. The government has travelled beyond their scope. We'll examine that whenever the issue comes, then we will discuss on that. Hope I am going in a good pace.
Yes.
You need to reduce my speed, I can reduce.
No.
It's comfortable. Thank you. So first it has to be satisfied whether it is a supply or not. Once it is satisfied, just I am giving the brief introduction of the how we have to, what we are going to looking into the statute. So then the levy comes into picture. Under section 9, the value determined under section 15, the rate of tax will be notified by the government, and if it is intra-state transaction within a state, basing on the principle of place of supply, if it is intra-state, then CGST and SGST will be levied. If it is an interstate transaction, then IGST under the IGST Act will be levied. Then comes the section 11, section 10, 11, which talks about the composition levy and the exemption transactions. So first it should be supply. If supply, then the levy. Okay, levy, the transaction is supply, the transaction satisfying the levy also. Then comes the what time you have to pay the tax. That is, the section 12, 13, 14 will decide what is the time of supply. So when at the date of joint venture, entering into the joint venture, you have to pay the tax, or at the time of receiving the OC, you have to pay the tax, or whenever the advance is received, whenever the sale made to the supplier, all these things will depend on the time of supply. So when has to be paid tax. So just park all these questions in your mind. So each transaction in real estate, we are going to answer all this. Then comes the value of supply. So at what value, on what value the tax has to be paid. This section 9 gives us the rate of tax. Section 12 and 13 gives us the at what time it has to be paid, at what value it has to be paid. In case of a transaction like the sale of a mobile, the transaction between the seller and the buyer, that market rate will decide. On this value, say this iPhone 1,25,000, on that you have to pay 12% of tax. That value is determined, the time is determined, and the rate of tax is determined. If these two persons are situated in the same state, then it is an intrastate transaction as per place of supply. So we have to decide even the place of supply for all the transactions in GST. For real estate, we are fortunate enough that the place of supply principles, they say that where the property is located, that will be the place of supply. If the supplier, that is builder or the landowner, and the prospective buyer, if they are located in the same state, then it amounts to intrastate. So there is no IGST with respect to these transactions. And by virtue of registration requirements, it says the place where you are making the taxable supply, in that state you have to take the registration. Right? So the builder is doing the transaction in, say, Telangana, in Hyderabad, so he has to take the registration in Telangana. So with respect to real estate transaction, maybe one or two transactions across, maybe in a year, could be IGST, but normally it will be CGST plus SGST only. Coming to the next aspect of GST, that is whether the transaction is eligible for input tax credit or not. So for that we have section 16, 17, 18, 19 till 21. So these sections will decide whether the builder or the landowner or the prospective buyer is eligible to take the input tax credit, whether he is able to avail the input tax credit or not. Even if it is available, then what section 37, 38, 39, that is the process or compliance for filing the returns, all will decide. If I am eligible, I can avail the input tax credit. Is there any restrictions for availing the 100% of input tax credit or not? So for that there are certain restrictions under section 17, subsection 2 and subsection 3. For that we have to refer rule 42 and 43. So I think for up to here everybody is comfortable understanding the provisions. Because day in and out you are doing this, just I am giving a recapitulation of the provisions which are, we have to look into the levy of GST on the real estate transactions. Now coming to the joint development agreement. How many transactions are involved in a joint development agreement? That is most crucial. By reading the notifications, by reading the circulars, by reading the exemption notifications, we come to conclusion that there are 5 transactions in a real estate transaction, that is joint development agreement. Whether these 5 transactions are really leviable to GST, that is a $1,000 question. One has to keep in that mind. Whether really GST is leviable on the transaction is a very big question. It's a very debatable question. So many writ petitions before the High Courts and the Supreme Courts are pending. Till that conclusion comes, we cannot say that whether it is or not. Then if you want to comply the law, then you have to go with those notifications. If you want to take other stand, then you have to litigate it. There is no other option available. So one of the famous case from our own Hyderabad Sistat, that is Vasanta Green project, is reserved for orders. Maybe it may come today, Monday evening, or maybe it may come after 1 year also. We don't know. But as per the Supreme Court rules and the High Court rules, when the order is reserved for judgment, it has to be delivered within 3 months from the conclusion of the hearings. If it crosses 3 months, then again fresh hearings has to be given by the court. So now it has been already 3 months are crossed. So again I think new arguments will take place. So again it will take a lot of time. Till that, whether the landowner is liable to pay GST on joint development agreement is a big question. We have seen in the past, maybe GST is just 6 year, 7 year baby. 6 years plus, not even 7 years, 6 years plus. Still we have so many judgments which is against the dealers in favor of the dealers. And so many issues which are not being decided by the courts so far. And there are certain grey areas which are not being litigated by anyone. So we may get a solution for that or we don't know. Because say a client comes to me and say that my project is 100 crores. Out of that GST involvement is just 5 crores. Let us assume. For 5 crores he is not ready to go to Supreme Court and make the litigation. Why should I bother for that 5 crores? I will collect from the customer, pay it off. If that is the attitude, then law will not prevail. The notifications will prevail. If my project is say 1 lakh crores, definitely it is going to be a point of litigation. Then we are going to get the justice from the judiciary, because one has to question it. And as a Satish Saraf chartered accountant, I cannot go and ask the Supreme Court to give me justice in this case because I am not the aggrieved party. I cannot go. Only the builder or the real estate landowners or maybe the prospective buyer, only they are the aggrieved parties. Only they can approach the courts. I cannot, you and me, we cannot go there. So there are 5 transactions relating to the joint development agreement. We are taking the typical example of, there is one piece of land, builder is approaching to the landowner and they come to some conclusions. They say that the tax liabilities relating to the GST will be borne by the respective parties, their own respective responsibilities, and after construction of the superstructure, 50% of the superstructure will go to the landowner and 50% will be the developer. And they, as soon as they enter into the joint development agreement, they go to the municipal authorities and they take for the building permission approval. Once it got, they even register for the RERA. They convert the entire project into on paper. They divide into the number of flats and the number of villas. Then they enter into a supplementary agreement demarcating that in the first floor owner will get these many flats, in the first floor the builder will get these many flats. Like that the entire building will be distributed among them. That is the supplementary agreement. But in other parts of India, it is not like, there is no concept of supplementary agreement. Everything mentioned in the joint development agreement only. So everything they finish in first stage and then they enter into the agreement. Because there in other parts of India, the sale is very fast, construction is very fast. They conclude very easily. And the builder is very eager, very quickly want to complete the project and you want to move to the next project. In Hyderabad, it is not like that. Even 4 years, 5 years, projects are going on. The first transaction with respect to JDA will be the levy of GST on the sale made by the developer. So the superstructure is under construction. Before receipt of the occupancy certificate, the builder want to sell the flat and what is the tax, when it has to be paid and what rate, all this will discuss. This is the first transaction. The second transaction, 50% of the flats will be on the landowner. When the landowner sells these flats, whether the GST is applicable, then if it is applicable, what rate, when it has to be paid and what value it has to be paid, we will discuss on that. The third aspect is, on receipt of the occupancy certificate, the law creates a fiction here. Though no service is provided by the developer to the landowner, but the law says that for the providing the construction services to the landowner, the builder has to pay tax on that. That is, the law says that the construction services provided by the developer to the landowner, on that the tax has to be paid. This is a third transaction. Fourth transaction is transfer of development rights. What is actually transferable? Transferable development rights are different from transfer of development rights. When, say, I am having a house property or a commercial property on the main road, when the government want to encroach or when we want to demolish my property, the government grants me by way of monetary compensation or by way of a TDRs, transferable development rights. So they have taken my 100 square feet of property, they give me 150 square feet of construction area. It will be on paper, no physical value. So when other person who is constructing, he can purchase those transferable development rights from me and pay me consideration for that. This is not we are going to discuss today. This is not the point of where I am saying the fourth transaction. Fourth transaction is transfer of development rights. So the landowner is transferring the rights in the land to the developer, is transferring the development rights to the builder. So on the transfer of development rights, the transaction what the government is saying, not on the transferable development. So that is the different aspect that has to be dealt separately, but though it is related to the real estate, but it is out of the JDA. The fifth transaction is wherever the builder does not meet the requirement of 80% of purchases from a registered sources, then he has to pay the tax on the 18%. And there is an exception to this. In case of cement, it should be 100% from the registered sources. So these are the 5 transactions which are these notifications talks about. If any other transaction with respect to JDA, please, anybody having any other transaction with respect to this, we will discuss that also. There is a possibility of 6th view. No, only 5 transactions. What notification is saying, we will go with that. The first area where the developer is selling the flats to a prospective buyer. If the sale takes place after the OC, the transaction is exempted. Clear? Because we love exemptions, then we'll go to the label. So if the sale is made after the receipt of occupancy certificate, the transaction is exempted, provided there is a one rider which says that the builder has not received any advance from the prospective buyer. If he receives 1 paisa or 1 rupee of advance before receipt, before the occupancy certificate, then the entire transaction will be subject to levy under the GST. That rider has to be satisfied. So if a client comes that next month I am going to receive the occupancy certificate, I have received from 100 customers the advances, but out of that there are 10 customers who have paid only 5 lakhs. And that we have paid 5% of that as a token advance, we have paid 25,000 as a GST on that. Now the builder and the prospective buyer is interested to avoid tax on that. Most of the people come to us like that. So what we advise, you cancel that agreement of sale, you refund him, let him claim the refund from the department directly, the 25,000, because now it is enabled. Then you enter into an agreement with the family member of the same prospective buyer, then the transaction is accepted. That is what we are advising, but it should not be on the same person. Satish entered with a builder, 5 lakhs I have paid advance, then when the agreement is cancelled, it should not be on the Satish. Because we have learned in lifting the corporate wheel, that transaction of a sham, transaction to circumvent the taxation law, then it is a violation of provisions of the law. So that principle you have to keep in mind in deciding this transaction also. So we generally give, this is between us only, we give advices like this. But some builders will follow, some will not follow. Because we are giving this advice only within the framework of the 4 walls of law. It is not beyond. It can be planned. So planning is not a crime in India. Avoidance is possible, but evasion is not. Tax planning is planned. Yes. So let us assume that the transaction is taking place during the construction, before receipt of the OC. So what rate of tax has to be paid? If it is an affordable housing, affordable project, then 1% of the total consideration. The law says that 0.75 plus 0.75, 1.5, but I am talking about the net rate of tax after deducting the land share, what is mentioned in notification number 11/2017, footnote number 2. So that 1/3 deduction we are giving. Of the land. That is possible. I will not recollect the citation of the case law or the name of the case, but it is there in Gujarat High Court judgment. So let us go by the notification only. So we are easy of understanding 1.5% reduced by 1/3 towards land, so net rate comes to 1%. If it is a purely residential project, all the residential plots will be other than affordable. Residential other than affordable, it will be 5% of tax. After abatement of 1/3, that is 7.5 minus 2.5%, then it comes to 5%. If it is a purely commercial project, then the rate of tax is 18% minus 6% towards 1/3, then 12% will be the rate of tax. If it is a mix of residential and the commercial, then we have two categories. Real estate, residential real estate project, RREP it is called. I'm not going into what is affordable, what is non-affordable, what is RREP, what is REP. I'm not going into all those definitions, because if I go into those definitions, it will be one day program. So if it is a RREP, residential real estate project, where there is a facility given to the developer, if the commercial proportion of the project is less than or equal to 15% of the total carpet area of the entire project, then it will be called as a residential real estate project. In that case, the commercial portion plus the residential portion will be subject to 5%, entire 5%. Entire is 5%. If it is a mixed project, if the commercial portion is more than 15%, it is called real estate project. Yes. Real estate project. In that case, the commercial portion will be 12% net of deduction, and the residential portion will be 5%. So in all these scenarios, you have taken almost 6 scenarios for 1%, 5%, 12%. In that, commercial portion is eligible for input tax credit. Only commercial portion. But the input tax credit is on a proportionate basis, applying rule 42 and 43. So my project is say 1 lakh SFT. Out of the 25,000 is commercial portion and the 75,000 SFT is residential. In that entire input tax credit for the entire project, I am eligible for 25% of the ITC and 75% I have to reverse it. If the project is 100% commercial, like Vasavi Nirmal Sinagulpet, so then it is 100% I am eligible for the input tax credit. Even on the same principle, you have to apply the for capital gains also. Is it clear? Yes.
The proportion is decided based on the SFT for commercial and residential, or it could be the cost incurred for commercial space.
Carpet area.
Carpet.
The loss is including common area and balconies. That is what is defined in the notification. It is not my definition.
So in this practical, it is quite possible for commercial for SFT cost is higher, and in the project for the residential part for SFT cost is lesser.
May not be. The sale value may be more for commercial portion, and the residential sale value will be less. But the construction cost for commercial will be less. General. And the residential portion it will be more, because you need to have number of toilets, kitchen and balcony, a lot of combinations are, and rooms, within the room there are walls and doors and plants, a lot of things are there in residential project. Then residential portion will have more cost than the commercial, because commercial will be a bare shell. Only 4 walls, 1 entry, that's all. If it is a bath, maybe it will be more, because strong room requires a lot of reinforcement. So coming to the sale of the flats by landowner, there are 2 thoughts available. First I will go with the notification, then we will go to counter review. If I talk counter review, then we will miss the bus also, maybe possible. even the same rate of tax applicable to the landowner, which are applicable to the builder. So I am saying that in case of affordable 1%, other than affordable residential 5%, commercial 12%, and mix of it 12% and 5%, and even whether the landowner is eligible for input tax credit, the answer is yes. On what is eligible? The third limb of the transaction, that is construction services provided by the developer to the landlord. For that he will be charging GST at 5% or 18% as the case may be. In that case, the landowner is eligible to take the input tax credit to the extent of that only, not others. But when the point of taxation for that, that is what I will say, time of supply, notification says that it is on receipt of OC. When the developer is selling, the landowner is selling the before OC, if he is eligible to take the input tax credit on OC, then he cannot use it. Practically it is useless. So what the notification says that the maximum time till which you can issue the invoice to the landowner on construction services. It did not say that it's only on that. No, that is the maximum time period. Because if you look at this section 12 and 13, the way in which they are drafted, even the notification is not required to decide that. The moment you enter into joint development agreement, you are liable. But by fiction or the government has given leverage, because like to synchronize the income tax provisions with GST, only on the OC, the developer is liable to pay GST for the construction services. So what we advise that, say out of 100 flats, the landowner in the month 40 is selling 2 flats. We say that you take the invoice for 2 flats for the construction services from the developer. To take the input tax credit, net of liability, balance if any there, you pay it. It is a permitted way of tax. If the entire 50 flats on the OC, if the invoice is given, on which the landowner is taking the input tax credit, by that time he might have sold 30 flats. Only remaining 20. And also it is after OC, no liability, no input tax credit, it is totally waste of money. It will become a cost to the landlord. So to avoid that, at least because before OC has sold 30 flats, you take invoice for those 30 flats and take the input tax credit and set off the liability. That is what we advise.
But the value?
That valuation will come to the valuation. So same rate of tax and the same input tax credit will be available to the landowner. What will be the value? What Leela Krishna is very eager to listen on that. So the value on which the construction services you are talking or the value construction. So that is third part, will come to it. The second part, what value? That is when the landowner is selling to the flat to a prospective buyer, the rate of tax applicable is 1%, 5% or 12% on the what value? Total consideration. Because in Telangana we have a facility of semi-finished registration. Other parts of India there is no that concept. Only after completion the registration is to take place. So for levy of GST, on what value you may go for semi-finished registration, but you have to pay GST on the entire consideration the landlord is receiving. What he receives in out of the record, we are not saying. On record which comes to his bank account, which he enters into sale agreement. To satisfy that sale agreement, he enters into sale of semi-finished flat, and also at the end of the project the builder grants a certificate saying that it is your flat. What is that we call? Occupancy given by the municipality. Every builder will give a certificate or a letter saying that this is your flat, it's completed. Handing over certificate. Possession certificate or handing over certificate. So till that period, whatever is received, that on that entire value the GST has to be paid. What is off the record? I am not going to talk, and we are not required to even talk on that also. It is out of our business and out of our advance. Coming to the third limb of the transaction, that is construction services provided by the developer to the land. Before that, we have said that in case of sale of land, sale of flats by the landowner, there is a contrary rules there. I am skipping that. So let us discuss on that. I have skipped it, but let us discuss. Notification 11/2017, that is the levy notification. It says construction and sale of flats. So landowner is constructing it. So where is the levy? There is one thought of one principle. One more thing. If the transaction has to satisfy, it should satisfy the test of supply. To satisfy supply, there should be a business. Whether the landowner is doing a business, no, he is interested in the acquisition of his property. His intention is not to do business. Developer definitely is doing business, but not by the land. So supply, it is not a supply. Even though assuming that by deeming fiction it is of supply, but levy fails because levy says that construction and sale of flats. So he is not doing any construction. If you go through any joint development agreement or any agreement of sale with the prospective buyer, nowhere it is mentioned that in case the developer fails to construct the property, the landlord never take the responsibility of constructing. So there is no construction activity as such by the landlord. But there is a contract taken by the department. Because you are charged for the construction services, that invoice is replacing the construction activity, the department says. They can take anything. And when it comes to the landowner, even in case of a landowner, income tax treating it as a capital gains, not as a business. When it is a tax of capital gains, when it is not a business. So even income tax act recognizing it is not as a business. Then how the contrary the department GST act can say that it is business? So on this point one has to litigate the issue. And the fair chances of winning the case also, because it is a good case. And coming to the same lines, the Vasudha Green project case. Need to detail that case or aware of the facts? So, when what is the facts of Vasudha Green project case is, what is argued before the Hyderabad Sistat? In that case is, my construction cost is say 1200 rupees per SFT. I am selling the flat for 4000 rupees because my portion of construction 1200 as a developer, I am also constructing the 1200 portion late into the landowner. So my cost is becoming 2400. The entire project cost is 2400 because I am selling at 4000 rupees, entire cost is recovered here. So again, levy of the tax on landowner is double taxation. On the same transaction, you are levying second time. So on this point, the matter went to the Sistat. Sistat delivered judiciously saying that it is not taxable. And the department went to Supreme Court by knocking the writ jurisdiction of the Supreme. Supreme Court has reserved the judgment. It will come. And even that also in case of Safari Retreats, section 17, subsection 5, clause C and D restriction, that also the judgment is reserved for orders when it is going to come. These are the two burning issues which everybody is eager to receive the judgment of the Supreme Court on these two matters. But what is going to happen? So, looking into the law, even we have to look into the Transfer of Property Act. Transfer of Property Act defines what is land. Even General Clause Act also defines land. Both say that Land and the right attached to the land is nothing but land. This interpretation is applicable for construction services, also for the transfer of development. So what the right in land is transferred to the developer is the right in the land. So that the right in the land, it is akin to land. Where the good, where the service. These are the constitutional issues or the most complicated issues one has to answer, but department never answers all these things. Even you apply for advance ruling also, they never answer these questions. They say that simply they reproduce the content of the notification, as per this notification you have to pay. But they never answer these questions. Even if you make them answer, they said single one word answer they will have. What is that? The contentions of the taxpayer are not tenable, hence set aside, we confirm the order. That is what is going to ultimately happen. Practically we are looking into all this in a day in and out. So what rate of tax the developer has to pay on the construction services? One issue. When it has to be paid and at what value it has to be paid. These are the three questions is important to answer this aspect. The rate of tax is, if it is residential, 5%. If it is commercial, 12%. Straightforward answer. At what time it has to be paid? For tax planning, we have to say that the maximum time notification specifies that it is on the receipt of the date of OC it is liable. In the month in which OC is received, in that month the invoice has to be issued for construction services by the developer to the landowner. In that month the tax has to be discharged. That is the time of supply. But for the purpose of tax planning, not to waste the input tax rate available to the landowner, we say that whenever you enter into agreement with the prospective buyer, you ask the builder to give the invoice, that you adjust the time. That is what tax planning is going on. Come the value. 2A of the 11/2017 notification, explanation 2A notification says that a transaction between the independent party other than the developer and the landowner and a third party. The first transaction nearest to the date of joint development agreement. So what is the first sale transaction? That is what is the first agreement of sale. On that value, the construction services have to be bid. If you are taking the composite value of the flat, on that you have to calculate 7.5% or 18%, give reduction for 1/3 of that, then balance 5% or 12% comes. And we have to keep in mind that the first transaction. So joint development agreement is entered in 2020, the first agreement is entered on say 22. So what is the value of that first agreement of sale that has to be adopted for the purpose of calculation of construction services into number of SFT or flats, basing on that, whatever is convenient, on that value you have to arrive, on that you have to pay the GST. Whether construction services really being provided by the developer, the government is saying that in exchange of transfer of development rights, you are providing the construction services to the landowner. By a fiction they are being paid. But actually construction services is relating to immobile property, and also the transfer of development rights relating to immobile property. Both should not be levied. We have a Vasudha Green Project case, and also Constitution also says that. Constitution defined what is land, what is good, what is service. So never say that the land is good or the land is surplus. So this is all even ultra vires the Constitution. Government aim is only maximization of revenue. To meet that, they do whatever they want. Coming to the transfer of development. Are we comfortable in construction services? We go forward. Transfer of development rights. What happens in transfer of development rights in day one? In day one, the landowner transferred the right in the land to developer to construct the or to develop the property. The taxable event is on the day of joint development agreement. But by notification, it has been extended till the date of occupancy certificate. In GST, till 35 March 2019, there was a different set of rules for levy. And after, on or after 1st April 2019, there are set of rules applicable. So most of the project which relating to before 31st March 2019 have been concluded. It has been 5 years now. So we are not going to go into those old cases. The new cases which are applicable as of today, the rate of tax is, for commercial it is 18%. For residential, there are two rates of tax applicable, 18 and 5. No, 18 and 5. We will discuss that when we come to residential. So in case of transfer of development rights, on the date of OC, the invoice has to be, in that month only the tax has to be paid. There is an exemption given to the landowner. So transfer of development rights have been shifted from the landowner to the developer under reverse charge mechanism. So landowner is exempted, right? And the law also, the further notification says that any flat is sold before receipt of occupancy certificate, that also exempted from transfer of development rights. So what is remaining unsold, unbooked, will be liable to GST. So the landowner portion, landowner is paying. The sale by developer is paying on that. What is remained on that transfer of development right, their TDS, they are paying it. So entire project is subjected to tax. Remaining is construction services, over and above there is icing on the cake, they are getting it free of cost. Next is unregistered purchases. How much tax the government wants on single transaction? This is what is happening in reality. We say to any builder who comes to us before starting of the project, we say that at least 25 to 30% you margin for GST. Otherwise you cannot survive. Maybe simply they say that for residential property it is 5%. What happened to your input tax credit? 18% on steel, sanitary fittings gone, 28% on cement gone, and the stand and bricks 5% gone. So cost of construction is tremendously increasing. Because of that only they are getting SFT for 10,000 rupees. They are competing with Bombay. People are feared to purchase flats in Hyderabad. Nobody. It is 4,000. 8,000, 7,000, 8,000, 9,000, 10,000. And the Hyderabad is very fancy, 19,000 SFT flat. What you will do with that flat, I don't know. 4,000 SFT flat, what is that? Lavishness.
And again, family 1 or 2 members.
2 members. For that 4 servants.
4 servants.
Maintenance is becoming very big
And the
task.
rental.
More than rental.
Yes.
If you have a independent house duplex, it is costing 1 lakh of maintenance. Because at least you need to have 2 servants. Plus dusting, maintenance, lighting, electricity, repairs, maintenance, lot of things. If you take duplex house is costing 1 lakh for 4 or 5%, a joint family. For 19,000 SFT flat, how much maintenance it requires? For Jadu Pocha, it will take 1.5 to 2 hours every day. Maybe more than that.
The maid girl comes.
That's what he's saying.
If the maid girl comes.
For that, you need to engage a housekeeping agency. No, housekeeping agency. This is what is, I don't know what people will do with 19,000, 15,000, 10,000 SFT flats. And even it is not villa. It is even again a flat. You don't have to share in the land. 1 floor. So if I stay in occupied, I may be like independent house, I may be paying 20,000 as a rent. For that flat maintenance is say 1 lakh. More than a rent, affordable. Maybe only Chiranjeevi, Nagasam, maybe people like that can stay in those flats, not like you and me. Construction services you have concluded and coming to development rights. The value is two ways to be calculated. In case of commercial projects, it is on the first transaction, 18%. Right? Clear? When it comes to residential project, 18% on the first transaction value, less land value. If it is and 5% on the date nearest to the occupancy certificate. The transaction concluded nearest to the date of occupancy certificate on that 5%. Whichever is lower, you have to pay that. It is not, don't look at me, Leela, it is notification sales. Yeah, 18% if you are paying on the first transaction nearest to the date of JDA. 18%. That comes to 12%. If you are calculating on the last transaction before the OC, then 5%, because the value will be marginally high. When I am launching the project, I will be entering it, say 5,000 rupees for the center. When I am handing over the project, I will be selling it 12,000 rupees. Or maybe 10,000 rupees. So government is considering these two values also. If it is on this value, you pay at 12%. If on this value, you pay 5%. You calculate both, whichever is lower, you pay at that. But to understand this, it took one day for me to break that. This so confusingly worded, so confusingly worded. How to read pre-notification and come to conclusion. One relating to the RCM, one relating to the forward charge, one relating to the exemption. If you club these three, then you come to this conclusion. If you read only taxable, only you will have 5% on the transaction value nearest to the date of. But if you look at the notification with respect to RCM plus exemption plus taxability, then you will come to this conclusion. I may be wrong. This is my opinion. That is what GST has to pay down that transfer of development rights. The last point is 80% from the registered sources. So any developer who is spending money for construction of the superstructure, he has to procure 80% of the project cost from a registered source. What is registered source? It could be regular dealer or it could be composition dealer also. But it should be registered. Because at least one time the tax has to be suffered. If you maintain 80%, remaining 20% you need not pay tax on that. So you have made purchase of say 70% from the registered sources in a particular financial year. Then remaining 10% on that you have to pay 18% as a GST. Not on the 20%. 20% is totally out of the revenue. Out of this 80%, if anything like cement is there, then on that you have to pay 28%. For cement, there is no 80% condition. So in less than a 1 hour time, I have given you the just brief of the provisions. It is not full discussion. Just to cover the aspects which are liable at what point of time, what rate of tax, and what value. So we have left out with another 25 minutes. We'll have a discussion based on the the topic which has initiated by me.
Corporate services, 5% is to the OC date in respect of unbooked flats, or 80% on the JDA date.
Ununbooked.
80% on the JDA date.
Near first sale value.
After JDA.
After JDA, first sale
First
value. 18%.
You will remember that.
It's like a service, normal service, 80% date it was.
No, reduce the land value.
Land value.
18 minus 12%.
Total value you take 12%.
Or you take 18% plus or 7.5%.
What is first option in that?
12% of the value of first sale transaction.
Okay.
Or unsold carpet
Day
area.
one is all unsold.
No. As on the date of OC, say out of the entire project, say
No,
1 lakh,
that's
let me. There are 1 lakh SFT order coming out, 1 lakh carpet area is coming out. Out of that, 30,000 is sold by the landowner,
Yes.
35,000 is sold by the developer, 65,000 is sold.
Yes.
On the date of OC, 35,000 carpet area, 35,000 SFT of carpet area is unsold. On that 35,000, you take the rate applicable on the first transaction value, multiply it, again multiply it with 12% paid tax. Or you also calculate 35,000 into last sale value, into 5%. You calculate both, whichever is less, you can pay tax on
Generally, we
that. Both of them. Even I also miss it.
Sir, ni close up
You'll miss it. No doubt. But you have to read the reverse charge notification and the forward charge notification. Then you will come with this.
Sir, is it the total unsold carpet area of both builder or landowner?
No. Entire project.
Okay.
Entire project.
Irrespective of landowner.
Whether it is falls under the area related to landlord or falls under the area related to the developer, no discrimination is made on the entire project.
You see the normal way, under RCM, 1 lakh SFT, under 35, 35 to 18%.
Value?
Will give 1/3 reduction like that. Rate is nearest to the OC date or JD date.
JDA date 18%, OC date 7.5%. And you can calculate both, whichever is higher, lower you pay. So it is only whether it is related to the developer or landlord. No government want it on the entire project. They want a 5%.
In fact, is getting even more
Yes, costly.
exemption.
For the transfer development rates, not for the sale of flats.
Okay.
IGST only India has. No other country has.
That's from the department perspective.
No, madam. It is from the perspective of the state sovereignty.
So, that is to
Revenue.
No revenue, state sovereignty.
depending on the income.
So state says that we want to have only one rate of tax for all transactions across the board. Then states have said that we are losing our sovereignty. States should have the right to impose their own acts. Telangana GST Act, Tamil Nadu GST Act, Andhra Pradesh GST Act, we are losing our powers. So to give power to them, this all is unlawful. It is not for other purpose, not for levy, not for collection. You put single 18% GST, you decide among yourself. 29 states and one union, you decide, you fight among us. But they are making entire nation to fight for that. Simply 30 people can sit in a room and decide it. But they made it 140 crores to suffer that. And by mistake, if I say it is liable to IGST, if I wrongly charge and pay that, then I have to pay again CGST, then take the refund, all these things. Not required if that one levy, one tax, one nation is there. Next.
Sir, in case of a JDA,
Think big. You'll get bigger clients and bigger money.
Sure, sir. Let's say there are the 1,000 flats. The 60% share belongs to the developer and 40% belongs to the landowner.
Yes.
Let's say if the project is under construction, the developer is taking the advances as well as the landlord also taking the advances. Now the landlord is taking the advance for each share of flats. Like he is getting a 400 flats. Let's say he wants to sell the project going to complete by 3 years.
Yes.
So what is the GST liability? I mean to say the GST liability will be there of the developer and the landlord because they are selling the flats during the construction. Now here the 400 flats, whatever the landlord is taking the money on the advances, should take a GST registration and discharge the GST?
Yes. You want to get the benefit of input tax credit. you have to take the registration.
Okay. Now, we discussed that there is a concept of RCM by the developer.
For transfer development rights. Not for the sale of flats.
In this scenario, can you give a little more explanation so that we
See,
can get
as per his example, 1 lakh of SFT is going to 1,000 flats are going off. Out of that, 400 flats to the landowner and 600 flats to the developer. Out of the 400 flats, the landowner is selling the flats, and out of 600 flats, the developer also selling the flats. Till OC also they are selling. On final one day, OC has come. By that time, the landowner out of 400, he has sold 150 transaction. 250 are remaining. Out of the 600, the developer has sold 350 flats. 250 are remaining. Agreed? So on this 150 flats by the landowner, selling it on that I pay 5%. And the 350 flats, the developer what he is selling to the customers, on that he will be collecting 5% and paying it to the government. On the date of OC, 250 flats of the owner, 250 flats of the developer are unsold. So 50% is sold. On these 500 flats, the developer has to pay under the reverse charge. Under the head transfer of development rights. What value? If it is commercial, 18% on the first value. If it is residential, there is two options are available. You take the first sale value multiplied by 18%, you will get the value. Or also you calculate the last sale value nearest to the date of OC to the independent party. Then you calculate it 18% on that value. Whichever is lower, you pay the tax. And for this, landowner is exempted. Only developer has to pay on that. If landlord 400 flats are unsold, you don't want to sell it, you want to give it on rent. But still, the developer is liable to pay on that 400 also. Whether it belongs to him or not. This is what. If it is before 31st March 2019, we have a different argument there. That will not prevail today. Yes, sir.
Can the developer take the responsibility of paying GST on that 150 flats sold by the landowner?
Personification is not possible in GST. You cannot be a benami for others.
No, not in case of reverse charge.
No. Person who is liable, landowner.
No, is liable.
So section 20C cast on him, not on the developer to pay the tax. Even the developer has by mistake paid, he has to take the refund, but he has to pay along with interest and penalties. When the government department comes for audit. That's what is always hanging.
The developer is going to pay under reverse charge for the unsold flats.
Yes.
So the unsold flats, reverse charge means again he has to discharge the entire cash on.
Cash on cash. And he can take the input tax credit. But what he will do?
Yeah.
It is after OC.
So the developer has to take the data from the landlord also. How many
Yes.
Sir, he can use this.
Very easily on the RERA website, you will get all that information. Source is available.
So he can use that input for other projects.
It is project wise.
For construction services, we don't need to give the invoice to landlord.
Yes. And so many people call me and say that my client is a developer. My client has issued an invoice to the landowner for construction services. How I should regard this in books of accounts? How I should report in GST returns? How to reconcile books of accounts with GST return? So basically, we are all chartered accountants. We should not ask this question. But still I answered those chartered accountants. That invoice is only for the purpose of complying with GST law. AS 9 never recognizes this transaction as sale or service. On this transaction, no revenue to be recognized. So in books of account, there won't be any entry. There will be one entry under current liabilities, GST collected, GST paid. That's all. And when you file GSTR 99C for reconciliation purposes, you say that this transaction is out of books. Adjustment entry with reconciliation. That's all. And whenever your books of accounts are matching with your GST returns, then there is something wrong. They should never match. Always there should be a reconciliation. Because in GST it is supply. In books it is only sale or service. So both never will match. For transfer of development rights, you are paying under reverse charge. How you are going to record in books of accounts? No, you cannot record it. That not even to recognize, but only the cash, what is outflow, that has to be recorded. Not the entire transaction. So, if you are a builder, you are auditor of a builder, then you will be going with completion of project method or proportionate method. So you recognize revenue on that basis, not on the what is the advance received, what are the flats sold. No, GST only advances on flats sold. So both never match. If they are matching, then something is wrong. Even for normal same transaction also, they should never match. There should be always a reconciliation. Because branch transfer one state to another state, we charge GST, but that is not a sale under the books of accounts. State labor supply. When you transfer the goods to the job worker, if he does not return within 1 year, there is a deemed supply. That is not a sale under the books of accounts. When you send the goods for approval, if their approval is not received within 6 months, that is a supply in GST, but it's not a, there is no time limit. Accounting standards say that the moment you came to know that the transaction is terminated, at that time you have to recognize it as a revenue, but in GST within 6 months. So AS 9 and AS, this GST will never go together. For chit fund, the revenue is chit commission. But in books of accounts, the difference between collection and the payment. So they will never match in GST for chit fund also, for lotteries also, for everything. This is how I look at GST and books of accounts. Yes. For him, what is GST and GST different, and what is actually received is different. For a share broker, it is different. For a money exchanger, it is different. Lot of disparity between these two. Maybe chartered accountant services, definitely both will match.
Yes.
If they are not matching, then something is missing.
Not matching, we will match.
Department will match.
Department will match that.
Sir, I am talking about reconciliation, not matching.
Sir, after also they are relaunching like how they will
Sir,
GST.
say the same example of Kedar, 1,000 flats. Builder not having money nowadays.
Correct. They are collecting.
They say that we are pre-launching 100 flats.
Correct.
Only they book 100 flats. Not the entire.
Only 10% or 15%.
That's all.
Collect the money.
To attract money, and say they are expecting end sale is 12,000 rupees. Today they are selling it for 6,000 rupees. And they promise you that if you sell after the completion, you will get at least 12,000 rupees. So in 3 years time you are getting 100% return. Even in that attraction also people are investing that. Some projects beyond 5 years, beyond 6 years, beyond 10 years they are getting completions. Some people are stuck.
Lot of
Even was
I changed.
Manjira also.
Recently.
But Aparna, Brigade 7, they are certain
My
reputed my homes.
My home.
They are very committed to dates.
Aparna also little bit.
One of my client is a supplier of Aparna constructions. For my home, particular activity, so particular say brick work, it is say 150 rupees for SFT, cubic feet, for normal builder. For Aparna it is 175 kg. Normal builder, they pay 150 for cubic meter of wall, but Aparna pays 175.
Right.
If they want a premium construction, quality, they never compromise.
And the amount also they will charge 100%. No cash.
No cash portion.
My home and personal.
Big itself, all. Even watering ground.
Yes, sir. Big.
Sir,
All big.
let's say for example, builder has 5 acre of land and adjacent 5 acre land he has come into a JDA. Now the project is of 10 acres.
Okay.
But in the example of TDR, there do we calculate 10 acre as the entire project?
10 acre.
Okay.
Because this notification applies to the person who is into the construction and sale of flats. So TDS applies to 10 acres. Construction service is only 5 acres.
And landowner, he gets registered for the sale of flats before OC. The biggest input he will get is the construction
Construction
services.
services.
But apart from that, usually nothing.
No, nothing. Because he is not putting anything. But the construction services is paying by taking registration, by taking the input tax credit, he can nullify that loss.
Yes.
He can nullify the loss, but he cannot gain out of it.
But if third leg is not satisfied, it is not compliant, even then the department is getting 100% GST on all flats. In the real life scenario, is the department satisfied with this anyhow getting GST on all flats, or they are insisting for this construction service?
Sir, 5 events compulsory is you have to make satisfied, compliant. You are getting 100% plus construction services plus 80% of the project cost. So because of given time, I have not gone into what is the project cost, how to calculate that 80%, what is the rate applicable for how it has to be calculated for 18% and 28%. I said 3 hours, even that 3 hours is not sufficient for real estate. Because we have to go to what is affordable, what is non-affordable, what is metro, what is non-metro in that, what is the monetary value for affordable, what is corporate value for affordable. All these, so many issues are there. Even for real estate project, there is a separate definition. For residential real estate project, there is a separate definition. All these definitions, if you want to understand and go and compare, it will take 1 day seminar. And for commercial, different, affordable, different, residential, different. And a unit of a project having affordable, residential and commercial, then lot of time. There are projects.
Sir,
Yes.
the given example, if we register 5 acres differently and 5 acres differently, then we have to comply.
No. What is for his example, the developer is having already in his name the 5 acres.
Yes.
And the landowner, adjacent landowner, for that 5 acres, he is entering into joint owner agreement.
So what if I name project A as for 5 acres and project B for T?
You can do it.
But liability for that RCM and all.
Still come.
It can be avoided.
Still comes.
Still comes.
Sir, if it's my own project in 5 acres.
So that is TDR's reverse charge is not basing on the JDA. Before 31st March 2019, yes, we can say. But after that, the new provisions, it is not.
So,
But one can argue.
if it is my own project, just in the 5 acres, at the time of OC, if I sold 75%, on the remaining 25%, you are saying we have to pay the TDR after 2009. Sir, one more thing, registration of this JDA agreement after 2019, there was one change. Is there any change?
No.
Do
From
we
stamp
register
duty aspect, stamp duty, there is no change.
as
Registration of JDA is not mandatory,
It's not mandatory.
but department insists on that. Even partnership deed is not mandatory, but department says they have to undergo for registration.
Isn't it that if we don't register it, we have to go back to the provisions which were before 2019? If we register only.
No. The date of JDA is criteria, not
No,
register.
registration. If we we don't register the JDA, the old project will be applied?
No, it's nothing like that. When the project is starting, that is the criteria. Whether it is registered or not a criteria. If it is registered, well and good, and whatever the amount paid for registration of JDA, that will be given to the builder while registering the flats.
You are saying department favors a registered JDA?
No. From stamp duty point of view also, there is no loss, what I am saying. For JDA, you are paying, say, for example, 5%. That out of that, 4.5% will be given as a deduction in the future transactions.
So another question, sir. You said the department favors a registered JDA. So let's say someone who has entered JDA in 2022, but they have not registered it. What is the remedy right now? Can they do something about it?
Maybe rectification is possible with the penalty. Stamp department accepts even the old dated documents with penalty. But there are certain conditions as to be satisfied. Some conditions will be there because nothing in India is free.
So in general, also edit document later on the exhaust date also.
Possible.
I mean, included I can go for instead of 2 years. Sorry, so if you will do that time.
Only for the time period you have to pay the penalty.
Sir, if the developer develops on his own land, having a good JDA,
Yes.
after OC, that is exempted. If I have sold the same example.
Should be.
It should be.
But department say that you are liable per 10 years. There is no transfer, strictly speaking, but this notification is not designed in that way.
TDM may not be applicable.
Should not be applicable. But the department says that it is your unsold flats are there, you have to pay.
Because I am facing the issue.
Yes, possible. It is if you say that it is not liable, then you are taking a aggressive step.
Is that issue?
That's what department is saying.
Yeah.
Yes, sir.
Thank you very much.
Lakshmi.
Later on, landowner, even for rent, for unsold flats. Can you take, he charges like GST for residential, even for commercial?
For commercial, he has to
Yeah,
charge.
he has to charge for GST for rent.
Yes.
Can you take the input of construction services?
PDF, GST,
Can you use for the rental income after OC?
Like in the
Safari is different project.
Safari needs
It is project wise with respect to the developer, not to the landowner. But for renting of residential commercial accommodation, there will not be any input tax. This view the government can take. Renting of immobile property, commercial in nature, there will not be any input tax rate. So we may not allow you, the department can say that. But there is no bar. There is no bar in the notification. But the department can take anything. But we have to litigate it. This is what my understanding, opinion.
Safari case will answer.
Safari case will answer so many issues.
And that is in Telugu. Like you can solve many of your doubts from that. And he is available for all of us any time, because if we are having our practice like this means he is one of the reason. And I request President Praveena Kumar Garu to give vote of thanks.
Thank you very much, Satish sir, for your valuable inputs and insights on the real estate topic. I thank all the members who came so long in the morning for this session. Thank you very much.
I request the managing committee to felicitate Satish sir.
have that one day seminar where we can deep dive. It would be really.
Yeah, we will plan. Definitely we'll plan. Police, I would like to speak.
Police certificates.
This company, new company, platform మీ అందరి ఇన్పుట్స్ ఇస్తే ఈ టైప్ ఆఫ్ నాలెడ్జ్ షేరింగ్ చేస్తే అందరికీ బెనిఫిట్ అవుతుంది. వీఆర్ ఫిక్సింగ్ ద సెకండ్ అండ్ ఫోర్త్ సాటర్డే, ఎవ్రీ సెకండ్ అండ్ ఫోర్త్ సాటర్డే 8 PM. ఇది ఒక హ్యాబిట్ లాగా మనం డెవలప్ చేసి వాట్ ఆర్ ద ఆపర్చునిటీస్ ఫర్ సిఏ, నాట్ ఓన్లీ జిఎస్టీ ఇన్ ఎనీ ఏరియా, నాన్ మెంబర్స్కి ఉపయోగపడే యూ కెన్ సజెస్ట్ ఆల్వేస్. ఓకే, ఎవ్రీ సెకండ్ అండ్ ఫోర్త్ సాటర్డే we are planning. Without your support it is not possible. So we have excellent faculties in Hyderabad and all are very nice persons. So based on your inputs we have a lot of opportunity for the insolvency, we have a lot of opportunity in real estate, other sectors, yes, social items. So that's international taxation. So lot of opportunity. Most of the people they are ready to pay, they are expecting service. Most of the problem we are not able to depend on the article students. Okay, that you can improve your talent, you can do better service. Client always be ready to pay even 1 rupee more than the market value. The commitment is important. Legal service, most of the CS are going to legal also. They are doing consulting work, they are doing all other matters. And Satish are like that. I remember almost 2015 I attended the GST before implementation. Okay, that time onwards is a best faculty. We want to improve further CM members, how best we want to grow ahead. And based on your inputs, and today we attended, next within the 2 months, this all not sufficient, we need to take a bigger R. Okay, without your support, we are not able to go forward. We need everyone input. If you think so and so is the next opportunity, you can tell me, we will get the throughout India or international, we will definitely bring the faculty. Okay, each and everyone is excellent people. Try to cooperate and support for the development of